The United States has also reduced tariffs on low-value imports from China, including those from Hong Kong and Macau, lowering the duty on de minimis shipments from 120% to 54%. This follows a mutual agreement between the two nations to de-escalate trade tensions and continue negotiations. Experts say this cooling off the trade war came sooner than expected, but trade volumes are unlikely to return to previous levels soon. Xue Rin reports.
Under an executive order signed by U.S. President Donald Trump, de minimis items shipped through the U.S. Postal Service now face a 54% tariff, or a maximum of $100 per item, down from the previous 120% rate. This comes amid a temporary thaw in the U.S.-China trade war, following the U.S. decision to lower duties on Chinese goods from 145% to 30%. Taking to the airwaves, Willie Lin, a logistics industry spokesperson, noted that despite the reduction, some products could still face tariffs of up to 70% when factoring in baseline duties and additional measures like Section 301 tariffs. Lin added that Chinese factories are expected to focus on clearing a backlog of orders instead of new ones, with many manufacturers struggling to manage an overwhelming pile-up of goods awaiting export. Economics and finance expert Billy Mack described the tariff rollback as both faster and larger than expected. He attributed the move to dwindling supplies of Chinese goods in the U.S., which poses a risk of worsening inflation. Mack predicted a surge in Chinese exports as factories rush to capitalize on the 90-day window, given uncertainties surrounding future U.S. trade policies. However, he also warned that the U.S. is buying time to strategize its coming moves, urging businesses to continue to diversify into other markets to mitigate risks. Cheryl Yun, Cable News.